Well, good morning, everyone. Thomas Montgomery here. We get together most weekday mornings at 8 o'clock Central to talk about strategies, tips, techniques, share success stories, all based around really a twofold mission that our 501c3 nonprofit has. Number one, we want to improve the financial literacy of entrepreneurs, and I'll describe that more as we go through this morning. And then secondly is to increase access to capital. And those two actually go together very nicely. We have a three-part agenda for today, and we're going to try to get this done in just 15 minutes. So we're going to move fast. The first agenda item is we want to make sure that we're all clear what a shelf corp is and why many would argue that it's the best way to get business funding. So we're not just going to say this, we're going to describe it, we're going to defend it. We're here to answer your questions. If you have questions, type them into the Q&A. It's like a chat box of Zoom. And then we want to go apply what we've learned. So let's do a little bit of background on our 501c3 nonprofit, which is called 509 Pacific. So myself and Chuck and Mark, all three of us used to be advisors with the SBA. So the SBA has a distribution center across the country called SBDC, Small Business Development Centers. Chuck, Mark, and I all worked in different offices of the SBDC. Well, when we worked for the SBA as essentially funding advisors, what we learned is that there's a formula for funding. So many times we run into entrepreneurs, small business owners. They want money, they need money, but they don't qualify. And that is their problem because you can't just want money. You can't just need money. You need to qualify for it. No different than getting a home mortgage, an auto loan, or any other type of financing. So what we realized is that there is a recipe or a formula that anyone can follow. So we decided instead of continuing to work at the SBA as full-time W-2 employees, we were going to form a nonprofit, take our model out to the private sector, and then we work with entrepreneurs who are resellers that help us carry the message out to the community. So we're going to talk about the buy or build equation here in a minute, so we'll hold that. But the bottom line is it's always important to know who your target audience is, right? So for us, we help imperfect entrepreneurs. Now, that may be offensive to some, but it's not meant to be. If someone is perfect, if someone individually and as a business entity is perfected, they wouldn't need us. They wouldn't need a Fundable Shelf Corp. They would be down at the bank this morning when it opens, applying for and getting a large loan. But that's not where most of the marketplace is. Most entrepreneurs don't know what it takes to be fundable and therefore are not fundable. So that's who we seek to help. I will mention before I go any deeper, we have a YouTube channel, which I'll give you the coordinates on here at the end of this morning's discussion. We have a full, it's almost an hour discussion on the 27 mistakes. If you've not viewed that, I encourage you to view it because it goes through what can keep a small business owner from being successful in getting funding. Now, again, the Fundable Shelf Corp, as you see the flyer in the shared background, addresses those 27 mistakes so that way anyone can become fundable. If you don't have that frame of reference, frankly, if you lack the financial literacy to understand what are the most frequent obstacles that entrepreneurs face, I really think it'd be worth your time to view that. All right, so there are some basics that we need to start with, some facts, if you will. Number one, and these are irrefutable. It doesn't frankly matter what you think or I think. These are the facts. If someone wants business funding, you need to have a fundable business. And that goes back to the point I made a few minutes ago. It doesn't matter how badly you want money or how badly you need money or how long you've been chasing after money. Do you have a fundable business? Do you meet the underwriting criteria? Most people don't know what those criteria are. They often don't meet those. We're able to address that, as I'll tell you here in a few minutes, with the Shelf Corp. That's basic or fact number one. As I alluded to a moment ago, with most things in business, you can either buy or build. So if you wanted to go build a fundable business, that's a viable option. but it's probably going to take more time, more effort, have more volatility. That's what we used to do. That's what we did at the SBA as advisors, as we built fundable businesses. And really, as a nonprofit, that's where we started. But we came to the conclusion that's not the best model because that takes time, effort, and energy, most people, and cost that most people don't want to put in. So buying is an alternative where you just get it. It's a business in a box. And that's essentially what a fundable shelf corp is. It comes to the client and it's already fundable. And again, I'll describe what those elements are here in a minute so you have full transparency. When you hear the term shelf corp, it's real easy to think that you understand exactly what it is or what it includes, but it's like many things. There's subtle or sometimes not so subtle differences. So when we applied for the grant and built the Fundable Shelf Corp program as described on this flyer, we built the program to address the problems that we typically saw. So this is almost a checklist here of what's needed to have a fundable business. And we included the elements. Sorry if I can get that cleared out. We included the elements that are needed that most people don't have. So one of which is we need to have a fundable business entity. So we need to have an entity, an LLC, C Corp, or S Corp that is in good standing with both the state and federal government. The industry code matters. So all of our shelf corps are set up as a management consulting SIC code. And of course, the purchaser, the client, is 100% owner of the shelf corp. So we have to start with an entity, of course. Now, do we need a business plan for getting business funding? Absolutely. So that's included. If we were to go build something, we would have to go create a business plan from scratch. In this case, we don't need to build it, it's already built. We don't have to go build the entity, it's already created. We need a unique commercial address. And we have people that want to battle us over this. Well, I'll use my home address, damn it. Well, you're not going to get large amounts of funding. Lenders are wanting to see that your business has a credible address. And there's lots of reasons behind many of these things that in this concise discussion I won't go too deep on, but you need a unique commercial address, not a post office box, not a shared address. We know that that's needed. We know a lot of people don't have it. So guess what? We include it. Business website, business financials are a big deal. So often, and I almost want to hit my head, people say, well, no, I've got a new business. I don't have this. It doesn't matter. Well, that's bullshit. If the lender wants it, it matters. This is not what I think or what you think. It's what do the lenders think and what do the lenders require? So yes, even if it's a new business, we need to have financials. We've got to stop making these excuses. We have to stop putting our head in the sand and say, oh, that doesn't apply to me. Well, it does apply to you if you want larger business loans. So one of the things that we provide are financials, including a balance sheet. And the balance sheet has collateral on it, which gets us to the next bullet. So often clients will say, oh, no, again, this is a new business. I don't have that. I don't need that. Lenders want to see collateral. And we know in many cases, small business owners don't have enough collateral. Therefore, we provide it. Another area that we commonly see there are issues with small business owners is often they have jacked up credit. So we built that in. So this is essentially a concise description of that 27 mistakes. I still recommend you watch that full 27 mistakes. But this is all the things that's included in the Fundable Shelf Corps, and we're giving these things away. We'll go through the dollars and cents in just a moment. On the credit improvement, we're going to use a legal, ethical approach, but we have a client named Darius, who is not on this morning. He's usually on. And as of this morning, we have his credit score up 176 points. It would be even more, but he's using a high amount of his revolving utilization. But separate from changing utilization, we have him up almost 200 points. So this is what's included in a Fundable Shelf Corp. If we go back to our agenda, what we were saying is not all shelf corps are equal. Not all shelf corps include all these deliverables as ours does. So from a pricing perspective, it's a no-brainer, right? So because we are a nonprofit, because we received a grant, there's a few things that makes it pretty much too good to pass up. Number one, there is no upfront cost. Clients can get a Fundable Shelf Corp through our program, no upfront cost, no out-of-pocket cost. Now, is there a cost to get a Shelf Corp? There is. However, we can finance that, and however, it's fully reimbursed from the grant once we go through the process. So it's incredibly valuable. So again, if someone already has everything that's needed to have a fundable business, this wouldn't make sense. We would call them a perfect client. But if they're imperfect, like so many of us, this is ideal. Where what you often run into is people that'll say, well, I've got some of these things. Well, it's not like horseshoes or hand grenades. You need all of these things to have a fundable business. So either you have everything you need or you don't. If you don't, then we can either fix what's broken or we can just plug and play with a Fundable Shelf Corp, which is typically the faster, easier, and of course, cheapest option. So let's go ahead and go through the process so we're all very clear how easy this is. So we have resellers, which we also call grant coordinators across the country, and we're always hiring more. So if you're wanting to get paid to help other people, you can become one, but that's not the point. So what we would do is get you with one of our resellers, also called grant coordinators, and you would fill out a Fundable Shelf Corp packet. Real simple packet. So you complete the packet. What will happen, we said there's no upfront cost, remember? No upfront cost. So then what we're going to do is pay for the Shelf Corp out of financing, and then we're going to reimburse the Shelf Corp through the grant, which I mentioned up here. So typically within 24 hours, we'll have the financing options for the client. The client can pick whichever options that they want. Could certainly be a lot more than what it costs to pay for the Shelf Corp, so it puts working capital in their pocket. Client will accept the offers they want. They'll pay for the Shelf Corp. So there's no upfront cost. Doesn't mean free. There is a reimbursement, but that's after we go through the process. The grant reimburses after the client has gone through and received funding. So go to funding in 24 hours in most cases. Participant will pay for the Shelf Corp out of the financing, no out-of-pocket cost. Then we get into the implementation. So one of the things I mentioned over here is 100,000. This is real. So right here, this is real. So we're going to transfer $100,000 over to the participants, and that's normally going to be in their first 24 hours. That's going to come in the form of accounts receivables. Well, why do we do that? Because we need collateral. Most clients don't have collateral, so we're providing the collateral. Then we can turn around and liquidate that collateral and turn it into cash. That's separate than the loan proceeds. Some people get confused and they think, oh, it's one bucket of money. No, you're actually getting two buckets of money. You're getting the 100,000, which we provide within 24 hours, stated here and stated here. And then we need about a week to get all the documentation put together. When we put all the documentation together, then we're able to go for funding for a business loan. So one bucket of money comes within 24 hours. The second bucket of money comes from applying for funding from the Fundable Shelf Corp after a week. Hopefully that makes sense. Don't want to combine those two. Those are different. Now, we've had a number of people say, well, great, we can liquidate the AR and that'll be enough to pay off the loan we get through the business. And that's true. In a perfect scenario, that's exactly right. All right, so let me cover the resources, then we'll get to any questions you have. So we have what's called a QuickCash program. It's a little bit different, but if you want to hear about QuickCash or see more information, just go to our nonprofit website, 509pacific.org. Not really our topic today. If you want to become a reseller, there's no cost, not even a contract to sign. Just email us and let us know you'd like to be a reseller. You'll get a flyer that looks like this, but it'll be editable, so you'll put your information on it, and you can go out and educate and help people. Again, it doesn't cost anything to be a reseller. If you need to talk to someone, you want a live person for a one-on-one conversation, I strongly encourage you to give Madison a call. Her number is 903-352-3390, and that's the same number that you'll find on the 509 Pacific website. I mentioned earlier the 27 mistakes. If you've not viewed it, or if you want to go back and view any of our past trainings, no passwords, no passcodes, no cost, you can go back and view any of our past trainings on YouTube, the Business Paralegal channel. So let me wrap up. If you have any questions, go ahead and type those in. Our goal today is to show you that anyone can qualify for a large business loan. Not by gaming the system, not by cheating, not by stealing, not by something that's too good to be true. There's a formula for funding. And so we need to understand what it takes to have a fundable business. And these are some of the key elements. But again, as I've discussed with you a couple times, the 27 mistakes will take a deeper dive, but this is a good quick checklist. Do we need to have an entity that's in good standing? Hell yeah, we do. Does the industry code matter? Yes, it does. Do you need to be the owner of the business? Of course. Do we need to have a business plan that tells the lender who we are, what we do, why we're qualified, what we want the money for, how much money? Of course, that's provided. Do we need a real unique commercial address, not just a post office box, not a shared address? Yes, it's needed. We provide it. Do we need to look credible online with a website and branded email? So many entrepreneurs are using Gmail and Hotmail and all these shit type of consumer email accounts. That doesn't look credible. We need to have business financials. We need to show that we have the ability to track money, to keep track of the loan proceeds that we're going to get, to create confidence and generate reporting. One of the most important financials is the balance sheet. The balance sheet needs to show collateral. We know a lot of people don't have collateral, therefore we provide the collateral. You provide the collateral, it's included. Now, we provide 100,000. If they need more, we can provide more. And then again, we mentioned credit. Does credit matter? Well, there's different lenders and different loan programs. Some of them don't look at personal credit, some do. But why wouldn't you want to have good credit? I mean, it's a reflection of you and your honor. Are you someone that does what you promised to do? Do you pay your bills as you promised? Your credit score is a 3-digit reflection of you and of me, of course. And so why would you want to have shitty credit? It wouldn't make sense. And again, that's included for free. We're seeing great results. And for those of you that came in late, Darius just went through that process and we got him up, I think it was 176 or 178 points. So it works and it's included for free. So you see all this, it's included for free. Why is it included? Because these are the things that's needed to qualify for business funding, and it's included in the Shelf Corp. So who has questions that I can assist you with? Jessica's asking about the cost of the Shelf Corp. Well, we have different resellers, also called grant coordinators, and they determine their price point, Jessica. So I'll get you, just reach out to Madison. Madison will get you with one of our grant coordinators. You can work with them and they'll be able to determine what your price would be. And you could become a reseller and set your own price. That's not the goal today, but you control the price. But in the end, it's free. In the beginning, there's no upfront cost. We covered that, right? No upfront cost up front. And then it's reimbursed once we've gone through the capital raise process. Who has questions, comments, concerns today in our abbreviated discussion? Okay, well, thank you all for joining us. If you have questions, let us know. Bizparalegal.com has more information about the Shelf Corp. You can always call Madison if you want. If you want to become a reseller, email us. We'll be back tomorrow morning, same time, same place. Everyone's welcome to join us. Thanks. Have a great day. See you soon. Bye-bye.